All right, good morning, everybody. Who's in the room? How many people we got? Say hi if you're alive. Yeah. Ken, I'm alive. Number 5 alive. No disassemble Stephanie. All right. Cool. Well, guess what? Today is a Tuesday in the United States of America, March 17th. Happy St. Patrick's Day, 2015. This is your daily Forex trading strategy session brought to you by tradersway.com. Forex ECN. It also allows you to trade energies, metals, indices, binary options, and more. In fact, why don't we go over, let's do some technical analysis. Why don't we go over some of these other markets? We'll go through the major pairs. We'll go through some yen pairs. We'll have lots of fun. Let's get going. Now remember, trading and investing is risky, not appropriate for everyone. Past performance, good or bad, do not predict future results. Therefore, stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Ken wants some DAX. Yeah, I think I can do some DAX. So I'm just skip scalping along. This is Aussie dollar. Can you see the price action? Double or triple bottom here on the 5-minute. Higher high. What do you do now? There's your new buy zone. Higher high, higher low. Yeah, it went a little higher. This would have been your buy zone. Okay. Then what? Higher high, the new buy zone. Higher high again. But pull back to the buy zone. Higher high. And then, whoa, big pullback. You see the double bottom? Then what? Double top. So now you're range bound, just using price action, right? So this is what I'm looking for now for selling Aussie dollar on the small time frames. We have now a lower high, lower low, confirmed breakout of that range. Maybe, just maybe, we do this and we do this. Okay. Using exactly the same methodology. Breakout, retracement, right? Breakout, retracement, breakout, retracement. As soon as you get the breakout, you identify the new sell zone, so on and so forth. Easy peasy lemon squeezy. I might not be a smart man, but I know how to scalp. Okay. Do some intermarket analysis. Oh, yes. Thank you, Alan. My name is Wayne McDonald. I am alive. Oh. I see. Oh, I'm so sorry. It's a long day. I know it's 7:30 in the morning. It's a long day already. You want to go over that scalp again? You got the charts now, right? Yeah, all right. What was it, Aussie dollar, right? Yeah. Here, let me get some more coffee down. Let's back that up. Higher, low. All right. Well, at least Trader's Way got a good logo shot there, huh? All right. All right, here we go. Price comes down into support, pulls back, comes down to support, pulls back, comes down to support, new high. Okay. What you do is you use this old resistance area as a new support zone. Okay. makes a new high. Use this area as a support zone, right? So that when price comes back, you buy it. And then there, on the 1 minute, you can see you made a higher high, higher low. You can buy it there if you want. Higher high, higher low. Same methodology. The old, right? The old resistance becomes support. The old resistance becomes support. Even on very small time frames, even 1 minute charts. Okay, makes a new high. Everything's good, right? What would you expect if you were buying? You'd expect a long here, right? Notice how it came all the way down to the previous support. 100% reversal. Certainly a 786. Okay, almost 100% reversal. If you get a 786 Fibonacci retracement, what is your next concern? No, you can't say reversal. Double top. Thank you. No, not reversal. Double top. Because it's not a reversal pattern. It's just telling you it's such a big pullback that the trend has weakened almost to the point of exhaustion. The reversal is until you get to the double top. Okay? So you're assuming now, or very concerned, that you're not going to be able to break resistance, which has already been identified. Okay? Then what? Down. Where? To that support again, right? So it's all the way across now. So two things are likely to happen here, right? One, you go to the top of the range. This is your range trading. Or two, it reverses, which means up to resistance and breakout. Now, as you can see, it decided to break out. Good. So what's the new trade plan? Up into resistance, down. If it makes a lower low, you use the old support as the new resistance, in which case you would wait for a You'd wait for a pullback, and again, if you made a low low, you would use that old support as new resistance. So if it pulls back, you would sell it again, rinse and repeat. And because this was such big support, I assume that we would challenge that and it would be difficult to break. So anyways, that's just price action, trading it up, then it exhausts, then it drops, breaks out, and reverses. Okay. Sorry about that. La 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 la. See if anything interesting's happened recently. Okay, you see this bottom? There's a bottom here. Drag it out. It's pretty gosh darn close, right? You can make it a little wider, try to grab these, right? And then that's where we are now. So that's the 4 hour. Go out to the daily. Doesn't look that amazing, does it? So non-farm payrolls was, where were we? 1,200, I think, in here, right? Was there, or, you know, it looks more like it was probably here. In any case, not long ago, I was asked about what I felt about gold, and I said I couldn't figure out a reason why you would buy it. Right? Anybody there for that? I couldn't think of one reason why you'd buy it. Hey, it dropped 50 bucks. Great. Cool. So I don't think you could sell it now without taking on undue risk, right? Seems like that would be a pretty risky play. If you wanted to buy it, now seems much more interesting. Not that I think it's a good investment, but I think we're clearly at support. So like, here's another touch, right? And there's one before it. You know, so if you were hell bent on looking for opportunities to buy, okay, you could probably get an argument here. I don't know how long it would last. Like maybe you only get to this area, right? Or you know, the FOMC comes out and changes people's minds. So let's talk about that for a second. What have market participants been thinking in their analysis of the foreign exchange market, in particular to the Fed, in particular to open market operations, in particular interest rates? What have market participants been doing for the last month or two? Has the dollar been strong or has the dollar been weak? I'll give you an interesting way to measure this. The dollar index is way beyond the monthly R3, probably monthly R4, which is redonkulous, I think is the scientific word. It's unbelievably strong. Okay, so then let's back that up. Why would it be so ridiculously strong? There shouldn't be an R4. I'm sure if you did the calculation, you figure out what it is. But that's not something that's usually calculated. You're usually not even near R3. R2 is the aggressive target. USD longs, yes. Why? Come on, balls. Why? Rest of the world banks printing money, blah, 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 blah. Market participants think the Fed is going to raise interest rates soon. They're front running the Fed. Okay, fine. But what if they're wrong? Like the Fed's not going to raise interest rates soon, which I've been saying for a year and a half. I don't think there's any reason, I don't think they're even thinking about it. Now, see, my opinions are based on like reading the meeting minutes, which, you know, managers of billion-dollar hedge funds don't even read the meeting minutes. Amazing. Just, it's crazy. But anyways, so a lot of people have been putting money on the line because they think the Fed's going to raise interest rates, so they got to get their money in before the Fed. They're front running the Fed, and they're probably going to learn tomorrow that they're wrong. Okay. Mike says, why would they want a strong dollar? Mike, who says they want a strong dollar? It's a consequence. So anyways, okay, so anyways, what I've been trying to share with you as far as a mindset for quite some time is that new information will come to the market. Some investors will find that they have been wrong in their fundamental projections, and they may need to rebalance their portfolio. Other market participants are already worried about that, and that's why you saw some dollar weakness recently. they're already worried about tomorrow's results. So what do you do? You take some profit. So if the dollar weakens tomorrow because FOMC comes out and they're like, we're not even thinking about raising interest rates. So you might get some short-term dollar weakness, and that could be short-term dollar gold strength. So maybe gold back to 1250 or something. Okay. What do you think? If we go back up in here, you know, that's not quite 1250, but you know, I'd say $50 to $100 in gold, right? Or it heads lower and you just take a walk. So it's not panic. It's not even a decent investment. It's just a logical reaction to people rebalancing their portfolios as new information appears in the marketplace and market efficiency takes hold. Okay? I'm trying to get like the magic out of it, and it's just pure logic. That's how I want you to think about the market. Just think about a whole bunch of people saying, oh, well, guess we were wrong in that. We're going to have to use a different model. Fed's going to raise interest rates in early 2016. Let's, let's scale out of some of our dollar longs. Good. And then then you buy the dollar next week. Good. This is what creates the ebb and flow. So again, let's have a quick argument here. Do you think the Fed eventually is going to raise interest rates? Yes. Good. What's the likely consequence of that? Currency strength. So it's like you've been buying dollars for a while, and if it does weaken this week because people were wrong on their timing, then we'll just buy dollar again later. Okay. Well, see, Mike, you're painting yourself a picture and you're training yourself to like it, even though it's a mess. The market is extremely logical. Okay? Be careful what you say because you're going to start believing your own nonsense. Be careful. Yeah, well, it's like this idea like, the world is a crazy place, right? And people are like just nuts. Well, no, actually, for 7 billion people, humanity actually does a pretty good job. All right. Chaos theory is interesting because it sounds like it's the study of confusion, but it's actually chaos theory is the focused on finding logical, repeatable, understandable patterns within the noise. And you should be focused on the pattern, not the noise. So again, some dollar weakness tells me two things. One, some traders or some market participants are worried that they've been long $2. They've been long dollar for too long, and that we have event risk on Wednesday. That's all it is, guys. We have some event risk on Wednesday. Take some profit. And if the Fed comes out and says, they do not change their statement, people are going to have to say, ooh, well, now maybe the October meeting is when they'll raise interest rates. So more people take some profit. As we can see in Commitment of Traders report, there's no sign that the trend is reversing. The dollar could be weak for 3 days, 9 days, 21 days, 48 days, 62 days. It doesn't matter to me. Eventually, the trend will come back because the fundamentals have not changed, so on and so forth. It's just people are currently rebalancing their portfolio. That's all. And so therefore, we can identify different areas where we'd want to buy that dollar back. but it can weaken. In fact, we want it to weaken. So anyways, I just wanted to point out gold. Gold is at support, and dollar has a very logical, intelligent reason to weaken for a while. And we know the correlation, right? Gold is the anti-dollar. So if the dollar does weaken for a week or a month, fine. Then gold will strengthen for a week or a month. That's all. All right. So when we were at $55 a barrel, we discussed oil going down to 20. How many people were here for that? Say aye. 2, 3, 4 people. Cool. 5 people, 6 people. All right. So we were at 55. Now we're at 42. How are you starting to feel about it? Starting to be a little more believable? Yeah, well, still a long ways down, but we've made the lower low now. Now it's possible. Before it was a pretty wild guess, right? So let's talk about the logic just very quickly. I want to make sure everyone's on the clue train. Why would we say something so ridiculous? What was the major logical reason? Right? Supply, demand. Supply is skyrocketing in but is demand going up with it too? So we can make this a supply. And we'll make this price. So demand is not going up. This would be your, right? Demand is not going up. So it's just purely supply and price falls. There's so much oil in the United States that there's no more place to store it. You can't, if you pull it out of the ground, there's nothing to put it into. Okay? Now, when did we talk about this? No, it's not going to fit, right? We talked about this when we were at 55 bucks. I don't think it occurred yet. I don't think we topped out. Okay? But somewhere up in here, so we talked about that it was likely going to be reported in the news, and once people start to hear of it, it's going to probably fall. Okay? Right. So Armand says, plus China. I think what he means is out of the supply-demand curve, okay, you kind of have this going on. Let's do it again. Sorry for not having a clear chart, but if you did it this way, okay, so there's more supply, right? And as there's more supply, price tends to fall. Okay. So now what about demand? Is demand going up like a 45 degree? No, in fact, demand is kind of like this, isn't it? Like China is in trouble, isn't it? Canada's in trouble. Australia's in trouble. The UK, still in trouble, right? So the equilibrium now, wow, we're doing economics. The equilibrium now is lower on the curve. Okay, if demand goes up, right? If demand goes up, then the equilibrium would be over here, right? But in this case, price is lower. So there's less demand and more supply. So if you were, I don't know, what, 13 years old in high school, and you were taking economics 101, that would be what you would learn. Correct? Supply up, demand down, what happens to price? Yeah. Easy peasy lemon squeezy, right? The only thing is, kids are a lot smarter now than when you were 13. Or are they? I'm not entirely sure. Luckily, I have two very gifted children that are also beautiful. What a combo. All right. All right. So that is logical. So we talked about it at $55 a barrel. We're at $42 a barrel. I mean, we could be professional oil traders. OMG. Okay. What about this? Well, if I were me, I would look at this area as possible support. Okay. If it makes a lower low than that, yeah, I might want to take a break, especially with event risk tomorrow. Notice how I have the chart marked up already. Let's do it in a different color. So that's just price action. Blue is price action, right? Let's change the color to magenta. I like magenta. Right? All right. Yes. Yesterday's low. Yesterday's high. Can you see how I've marked out? Right? I like to label my charts nicely. And did it make a higher high or a lower low yesterday versus the day before? Which one, guys? See, yesterday double bottomed, or should I say the day before yesterday double bottomed, then yesterday made a higher high. So if I was using price action, what would be my plan? Buy or sell? Correct, I'd be a buyer. So I could launch off this old, what it was support, then it was resistance, now maybe it's support again. Or I can use yesterday's range. So you know the top and the bottom. So the way I'm eyeballing it now is this area. Okay. And there are three things that I'm looking at if I'm in the yellow zone and I'm a bull. They are the 618 Fibonacci retracement, the 50% Fibonacci retracement, and the one that you can't quite see, the 382 Fibonacci retracement. So now we have a roll reversal and a 382 Fibonacci overlap or confluence. Wow. Well, you know about that yet. What if it dropped down to the 618? It's a little lower than I would have liked, but is that still viable? Why? People are saying yes. Why? Normal retrace. Come on. Not a lower low. Fine. Come on. Okay. It's a 618 Fibonacci retracement. It's a weekly central pivot point. And if you had to, you could squeeze it into that if you needed the extra logic. Okay, so you're right. You got two choices of what you can do. It's not a tough decision, as you can see. So you got the long at 382 or long at 618. If I'm a bull, those are the only two possibilities for the day. Done. Hey, what do you do? Oh, I trade the S&P 500. That's my job. So tell me about your day. Well, I identified two areas where I buy. Tell me about your exhaustive day. What do you do at work? Well, I'm kind of done in the first minute. And the rest is a lot of waiting. Batista says, isn't 382 more risky? I would say no, because if it is a fast-moving trend, then it's more likely to continue. Okay. Also, you could take a small loss here and wait down there. But I tend to look at things, I've tried all kinds of trading. I've scalped. I've done nothing but scalp the 1 minute chart for an entire year, right? So I've tried a lot of everything, as they say in this. You know, I think the easiest way to look at this is to say your stop is below the lowest low, and you're a bull, and you can afford either one big, zone, meaning if you longed here and it went down, 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 and then made a lower low and knocked you out, it wasn't a lot of money and it didn't hurt you statistically in your portfolio. Where you get into trouble is it drops that far and it's 30% of your, well, guess what? You are over leveraged. Okay? A 1.5% drop in the S&P 500 shouldn't take 30% of your account. Think about it. Okay? The other way you look at it is you can take a shot here and have a stop close. And if that fails, take a shot here and have a stop close. And then maybe even leave some here for the triple bottom play. And you have three smaller positions that add up together is still not that big of a deal. Right. So again, the S&P 500 drops 1.5%. You shouldn't be losing 25%. Think about it, right? So you leave room for the type of planning. Okay. So to me, I don't mind buying the S&P 500. I think it should go up. Okay. And I like to see it fall because I'd like to buy it. But that's my opinion. That's my strategy, that kind. Now, your tactics as far as trade management and stuff, to me, it's all the same. So it comes down to personal choice, right? one big trade or 3 mini trades, whatever. The most important thing is you've decided ahead of time for some sort of logic, even if you're wrong, I don't care. You made a decision that you think the S&P 500 is going up, and you will buy at support. And you've identified multiple levels of support in which you could logically buy. Even if you're wrong, you'll probably do better than what you've been doing. All right? You either lose less or make more. Either way, have a plan. Don't worry about being right or wrong, because trust me, you're going to be wrong. Part of being a trader. The trick is not to be so wrong that you're out of the game because you've ran out of money. All right, so this is FTSE. I got a request for the DAX. You guys like the German stock market? Yeah, das ist gut. He's good. Here we go. So let me ask you something. How do you think about this thing called QE? So the European economy is in shambles, right? They might have to kick a country out of their union because of default of billions of dollars. Wow. And how would you describe the German stock market this year? I mean, it couldn't possibly be any worse, right? Yeah, but free money tends to help. This is what I've been saying, right? This is what investors do, guys. People are talking about gold. Why do they talk about gold? How come every time I go into NFP at FX Street, all these people want to talk about gold? Like, gold? Are you nuts? What's wrong with you? Right? Look at the German stock market. Why don't you ask great questions like, how about the German stock market? This is what professionals are doing. Well, you say Germany's benefiting in a big way. It's just the devaluation of the euro and the central bank flooding the market with euro, so that by design it increases asset prices. I mean, that's what QE does. And if I showed you an S&P 500 chart with quantitative easing, it would look much the same. Up, 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 up. Quantitative easing increases asset prices. That's what it is. That's what it's for. That's what it does. That's where your money should be. German exports increasing. Yeah, let me go back to the last time the euro crashed. I was sitting on the hillside in Connecticut, which is a very, very, very wealthy part of the United States. And it was next to a racetrack because I was with family, and we were racing vintage Lotuses, but other people brought, Bugattis and stuff, and Porsches and all these beautiful vintage cars. It was the Rolex Vintage Racing Series. So anyway, I'd been in the paddock for like a day and a half, so I just needed some fresh air. So I went up onto the hillside. I'm watching some of the races, and I'm just sitting next to some dude, and whatever, I strike up a conversation, right? And turns out he was the vice president or president, maybe, of BMW USA. This is the kind of people you bump into at an event like this, right? And turns out, he said they used to be sponsors of the event. The problem is, because of the value of the euro, they didn't make any money on selling BMWs. So he's like, we really don't have any interest selling any cars, because by the time you can do the currency, risk, when you pull that out, they just didn't make any money. Whatever. So, amazing, right? So, but right now, BMWs are getting cheap, right? Cool. Maybe it was the other way around. Now I'm thinking about it, right? The euro was super strong. Whatever. If I got that backwards, I think you get it. These changes in currency are very, very serious. Very, very, very serious, and can affect a global company's entire profit. So yeah, getting cheaper. The only problem with this, I mean, that's what you could say. The only problem with this is more BMWs, I believe, are made in the United States than Germany now. I don't know if that's true. I think it's pretty close. If it's not true, it's close. And I know they actually make BMWs here and ship them back to Germany. Now that's very confusing, isn't it? The Germans are buying U.S. made BMWs. So are BMWs still German? It's all very confusing. I'm so confused. Whatever. It's hard to tell the difference between BMW, Toyota now, right? So Porsche's the new BMW. All right. So yeah, let's move on. .com. What do you want to do? Some CAD, pound yen. Let's look at this one. Okay. Low, lower high, lower low. What do you do after a new lower low? You identify old support. Oops. Right? And it should be resistance. Makes new lower low. What do you do? Identify old support. It should become resistance. Makes a new lower low. Identify old support. Should become resistance. Okay. What if it doesn't make a lower low? Then what? Yeah, well, then if you're a bull, you might want to do something, all right? At least be ready. That's what you're looking for. Now, when I draw these things out, is it helpful? Or is it starting to have an impact? Just the little things like a lower low, identify the next lower high, then it makes a lower low. I mean, am I burning You know, am I burning a part of your brain? You know, am I branding it? Is it sticking? Yeah, yeah. Do you ever kind of get, do you ever get frustrated? Like when I do that, it's absolutely clear. And then when you do it on your own, it's as clear as mud. How many people see mud when they're trading on their own? Now, some of it obviously is hindsight, right? But it's not all hindsight because you know that that's what happens, right? And then how many times do you see me draw it out like this? Okay. But the point is that what you're doing? Are you thinking about it ahead? Right? So we do things like this all the time, right? Where I'll draw the shape. I'll do it and I'll say, all right, there's the sell zone. But the problem is we're down here, right? So now we're here. And I'm saying if you're a bull, you should probably get ready for the buy. So that's an hourly chart. What would it look like? In my book, I talk about painting a picture with your mind's eye. So we're on an hourly chart. Let's say it holds here at 178.50. Midpoint psych level, fine. Double bottom, fine. Oscillator as a kicker, fine. Good. Has certainly the potential. So let's say you're a bull. Fine. Let's just say you're a bull. Now close your eyes and can you picture what the 15-minute chart would look like if you had already decided that this is where you wanted to buy? What would the 15-minute chart look like? Can you see the 15-minute oscillator? You probably want that oversold and maybe even trying to turn up. The 21 is probably below the 55 because it hasn't reversed yet. We're looking at a possible reversal area, but it hasn't reversed yet. So what would the 5-8 look like? What kind of price action would occur on the 15-minute chart to create a reversal? If you bought a 5-8 cross, is it just going to go price going to go straight up through the 21 EMA without a challenge? Probably not. It would probably rise up, hit the 21, make a Fibonacci retracement down, and then up through the 21 to the 55, and then a Fibonacci retracement down, and then up through the 55 back to the 200, all creating a green candle here on the hourly chart, right? Can you guys see the reversal on the 15-minute chart? I don't know if it's occurring, but in your mind's eye, could you picture what a nice reversal would look like on a 15-minute chart? Another way of saying is, do you know what you want? What is it that you want? You might be at support here. This might be a double bottom at a midpoint level, right? With a Stokes kicker. This might be a reversal zone. So if you're a bull, you might want to get ready. So what is it that you want? What do you want to get into this trade? You should know what you're looking for, because if you do, if you can paint a picture with your mind's eye, And if it actually happens, you know what it looks like because you've been waiting for it. Versus just mass confusion and chaos, right? So therefore, that's how I start my planning processes. Okay? Do you want an oscillator to look like that? Okay, it's only 94.4 oversold. Is that something that you looked for? Or is this something that you envisioned in your mind? If you were thinking about buying on the hourly chart, did you want 15-minute oscillator to be 95.4% oversold? Does that fit, your vision? Anybody else? Is anyone completely confused? So that seems pretty reasonable to me, right? I kind of even like the fact that it's turning up a bit. Okay. Let's see what's going on here. Oh, is this 21 below the 55? Yes. Why? Well, the market's going to still technically be bearish because price hasn't even reversed, yet alone the market. But what if it went up? Did it go straight through the 21? Probably not, is what we said. So what would it do? It'd probably come down here, make a Fibonacci retracement, and then what? Up to the 55. Then what? Fibonacci retracement. And then what? Up to the 200. And then what? Actually, I have no idea because that's fair market value. But seeing that we're, below this area, I think we're going to get challenged. But remember, this plan was an hourly reversal pattern now, right? Double bottom. So I would say now you would fib this whole thing and then slingshot up. Because the whole thing was set up on the hourly chart first. Okay? And now you've envisioned a reversal before it happened. So now if you see it happening, you might actually recognize what you're seeing. Now, if you're really a cheeky monkey and you're unbelievably aggressive about buying the hourly chart double bottom, you would say, we're already at support. You don't need any more. You don't need anything else. You get it. So you buy and off you go. Now, to me, I'd rather be a little closer to midpoint cycle level before I get that aggressive. So I wouldn't be shocked if it did this first. But then here, if it did a 1, 2, 3, I might be into that. Midpoint cycle level, double bottom on an hourly, everything else oversold as far as can be. And I can have a stop pretty close. Risk 25, go for 250. Fine. Zeal asks about the moving averages. Let me go back to a 15-minute chart here. Are you asking, would I wait for the 55 to cross above, the 21 to cross above the 55 and have the 5 come up, the 5.8, and then do this? You totally could. Okay. It's just very late. Nothing wrong with it. But if you think that's going to happen, you could be involved earlier in the process. Okay. But basically what's happening on an hourly chart then is you're going to see this, this, and that. Okay, but now we've dropped. If you think that's going to happen on an hourly chart, then let's plan it out on a 15-minute chart. What would the price action look like on a 15-minute chart? On a 15-minute chart, right, it's going to be up to the 15, down, up to the 200, down, or I mean 55, up to the 200, right, and then down. Now this 21 EMA is not going to be resistance, but it'll be support. Then up, down, up. So the green arrows are price action on the 15-minute chart. The black arrows are price action on the hourly chart, maybe even 4-hour chart. It's all the same, only the time will change, right? That's why it's fractal geometry. Price and time are on the charts, right? The pattern will exist on all time frames, right? Only the observable changes. Okay. Hey, look, a big green candle. Who would have thought? So that's piggy. Just looking around the world here, British pound very weak, euro very strong. Swiss neutral, yen neutral to weak, dollar weak, Aussie weak, CAD weak, Kiwi weak. So it's just people getting out of their euro short trade, if you ask me. People getting out of their dollar long positions. And we're waiting for FOMC. Not a problem. So think about it this way. In 6 weeks is the next FOMC meeting. What do you think is likely to happen if we have strong trends? What do you think is going to happen to those trends 3 or 4 or 5 days before the FOMC meeting? What can we learn from today in regards to the way that institutional investors manage their portfolio risk? What's your new event-driven swing trade strategy? Not flat. Not, well, take profit? You're probably not a large institutional investor that looks at things, on a monthly point of view or weekly point of view. Yeah, okay, they take profit. What could you be ready to do? Well, if you can see the risk, like professionals are, and you can foresee them taking some of the risk off the table, meaning their positions, okay, you will have some counter trend trades, right, that may appear on the short term. So if we look at commitment of traders report and see everybody's long the US dollar, in particular against euro, okay, fine. But now, 4 or 5 days before a major event risk, those traders that have been short euro USD for so long and they have a ton of profit, they may take that profit, remove the risk or reduce risk, and then try again later. So now you can be ready and turn a profit. It shouldn't be, I don't think it's unreasonable that the euro USD is going up right now. So it's understandable why it might be happening. And then on top of that, I'm just going to want to sell euro USD later. So I know two things. I understand why it might be going up. And I am still a firm believer that I'm going to sell this, right? With great fury, right? How does it go? With great vengeance and furious anger. Yeah, sell it, right? Fire for effect. So cool. Well, Mike, now you're like 3 or 4 days late. So now you don't do anything. I'm telling you next time, okay? Next time, maybe a double bottom appears on FOMC and you say, I'm going to play it. Okay, you say, oh, Wayne, that's hindsight. Now you see it. Now you're so genius. Yeah, okay, I'm a genius. Because I'm talking about what you're going to do 6 weeks from now. But there's a 99.9% chance you're not going to do anything different 6 weeks from now. And then I'll say, hey, you know what? You could have planned out. Well, I mean, you can put it on your calendar, right? Put it on your calendar. 5 weeks from now, maybe exhaustion on serious trends could occur going into FOMC. You get it? Put it on the calendar. Right? So Mike says there's not a good trade now. Well, you buy at resistance, right? That sounds like a terrible idea. But maybe you can sell at resistance if that's what you want to do. And I think if you lost money selling Euro USD, you couldn't feel too bad about it. So it comes down to what do you want to do? Remember, I don't care what your logic is even. The only thing I care about is that you made a decision based on some sort of logic. Fuzzy logic, random logic, flipping of a coin, just anything. And I don't think you could, if you traded other people's money and you lost selling the Euro USD, I think if you sat down and talked with your clients to explain that you lost some money because you sold Euro USD and it went up, I don't think you would feel that stupid, right? I have no problem with you selling Euro USD. I don't know if it's going to fall here, but it might. You might as well be ready. So what would the reversal look like on a 15-minute chart? And start your vision process, right? Do you guys practice visualization? Do you guys know Jim Carrey, the comedian? Jim Carrey, when he was dead broke, just a struggling comedian, would walk up into the Hollywood Hills and visualize, his performances as if people laughed and like that he was performing to a huge crowd and he'd do his routine. And that people it wasn't happening yet, but he'd go on jobs and gigs and stuff and come back sort of depressed and would visualize his success, that at the end of the day he felt like he had it in him to be successful. Even if he got turned down for a job, even if he got turned down like for a stand-up gig, or if he did a gig and nobody really got his jokes because he's, goofy, right? So he did that over and over again, visualizing his success, and not in sort of like, just drinking champagne in a hot tub, right? Actually doing his craft. And then one day he wrote himself a $10 million check and put it in his wallet and carried it for years. And he had it dated like, November 15th. And it happened to be like, I don't know, 5 years in advance, right? And he visualized all the things that he was going to need to do. Wrote himself this check, dated 5 years in advance to the day. And 5 years to the day later, got a check for $10 million. Dumb and Dumber. But he visualized his success. He visualized the things that he needed to achieve that success. And instead of crying about lacking his success, or sitting there waiting for the universe to deliver the success out of his entitlement of somehow he deserved this success, know that he went out and then he did the things that needed to get done to have that success. And just by fluke, almost to the day apparently, he got a $10 million check for doing Dumb and Dumber. So it's not the dreaming part, right? Any idiot can have a dream. But he knew what needed to get done for him to have the success, and then he did it. It's the same thing in a simple way now. If you want to sell the Euro USD because of something that you see on a higher time frame, or maybe it's your fundamental analysis, you just want to sell because your strategy is to sell the Euro USD. Again, I don't even care what your logic is. Flip a coin, but you want to sell. So now you should be able to visualize, even though it hasn't happened yet, you should be able to visualize what your charts will look like so that you have the opportunity that you are looking for. Now, you're just not looking with your eyes because it hasn't happened yet. You need to visualize it with your mind's eye. What would a good pattern or a good chart setup, what would a good opportunity look like on a 15-minute chart if in the near term, in the next 2 hours, a short opportunity of what would it look like? And if you can visualize it now, in the near term, if it happens, you will know it's a good opportunity and you do it. Okay? Is that too far out? Back when I was leading a team of salespeople for a startup that I helped grow into a huge success, I had these salespeople go out and test drive the car of their dream. Okay, fine. Now this is where everyone freaks out. Wayne, there's more to life than cars, and that's so shallow. And I just say, shut your mouth. Okay. Now the second part is that yes, there's more to life than cars. Fine. But I want people to visualize and feel something. And it's amazing the experience that you have. If you're going to a nice car dealership, you can't show up in, tattered clothes. So you actually shower and comb hair. You put on nice clothes. You go to the Mercedes dealership. And you start looking at these nice cars. And then, I told people, I want you to sit in the car. I want you to smell the leather. I want you to touch the steering wheel. And when the salesperson comes, I want you to go for a test drive. I want you to get the brochure. I want you to send it to me. But if, A car is an attainable goal. It's not a pie in the sky dream. Okay? And it can be had. You can focus on that if you wanted to. No, it won't solve the world's problems, nor will it make you a better person, but it's something that's reasonably obtainable. But it's going to require some effort and some sacrifice and some hard work and a great deal of success for you to have it. So at least we could talk about it when you're struggling through periods that, at least at least you have some sort of goal in mind, some outcome of why you should work hard, why you should struggle, why you shouldn't quit. Because the person that works hard, the person that doesn't quit, the person that is focused is very often the type of person that's driving that dream car. And I want you, in a sense, to want it and to be able to smell it and still remember what it was like to sit in that car. You understand? That it's real. And that the only thing that isn't real, that you haven't made a decision, but the decision-making process, the electrical chemical energy in your brain that says, I'm going to do it, actually creates energy. It actually adds a physical element to the universe. It's a physical thing. You've created electrical chemical energy in a table. The desk in front of me is nothing but electrons vibrating. I mean, it's energy. That's all it is. So if you create the idea that you're going to make it happen, and then you add some energy behind it, you actually work hard, that you can obtain what seems to be nothing in your mind, but over time can be a physical thing. Now, it could be a Mercedes, or it could be something, bringing happiness to the world. It can be both. It could be whatever you want, but 99.9% of people don't even know what they want. They don't even know what the trade plan is. What's your strategy? I don't know my strategy. Then what the heck are you doing? At least flip a coin, okay? So in this case, if I said, so what's your strategy with Euro USD? I'm going to sell it. Good. Give me 3 different areas you'd like to sell it. And then with your mind's eye, visualize what the opportunity would look like when price is in that area. And I'll tell you what, even if you're wrong, if Euro USD goes up this week, it's not going to be that bad of a trade. Okay? Because you know what the success looks like. And once it begins to fail, you can get out. But more importantly, you know what the successful opportunity looks like because you've already visualized that it's happened. So when it does happen, your brain will confirm it and say, I recognize this pattern. This pattern will make me money because the Euro USD will fall. But you have to be able to see it. Okay? Peace on earth. May the pips be with you. May your profits be above average. I hope to see you again tomorrow. Tradersway.com. Thank you for being a client. Take care of yourself. You hear?